An extraordinary day of trading on Thursday left investors with as many questions as answers for Twitter, TWTR Stock. But investors are showing plenty of doubt that Elon Musk will find himself running Twitter anytime soon. Musk's bold offer that he would buy Twitter for $54.20 per share and take the social media company private would cost $43 billion. It's a huge number, but doable, considering that the CEO of Tesla, TSLA, and SpaceX happens to be the world's richest man, with a net worth of $273.6 billion. The proposal itself sent investors into a frenzy. More than 250.19 million shares changed hands on Thursday, far more than the stock's average trading volume of 38.21 million. Musk said that if he was running Twitter, the company would be an inclusive arena for free speech. He also said the company policies and algorithm should be open and accessible so people could examine it on open source platforms like GitHub. But the most interesting thing about Thursday was the movement of TWTR stock. Yes, Twitter stock jumped about 13% in early trading on Thursday after Musk's announcement. But the stock utterly failed to rise anywhere close to the $54.20 number that Musk set in his bid. Why are investors showing some caution? Two reasons come to mind that are worth some additional exploration. Reason number one, Musk's track record. Undoubtedly, Elon Musk is a serious man. He's a true visionary that revolutionized electric vehicles. He founded the online financial services company X.com that later became PayPal, PYPL, which he then sold to eBay, in 2002. That was also the year that he founded SpaceX, which had the goal to make more affordable rockets. Now SpaceX is an important contributor to carrying supplies to the International Space Station. Musk is a hands-on CEO, serving as a chief designer for SpaceX rocket systems. And then there's Tesla. He helped found the company in 2004 and took it public in 2010. Tesla has the mission of making affordable electric vehicles for the masses, and it's been successful in every metric. Now valued at more than $1 trillion, Tesla has the largest market value of any vehicle company in the world. In December, he was named Times Person of the Year for 2021. But for all of that, Musk undoubtedly has his eccentric side. For instance, he once had his boring company sell 2,000 novelty flamethrowers as a publicity stunt inspired by the campy movie Spaceballs. In 2018, he announced on Twitter that it was considering taking Tesla private at price of $420 per share. The price was largely considered a reference to marijuana, and the Securities and Exchange Commission settled fraud charges against the Tesla CEO. That was also the year that Musk got involved in the closely watched rescue of youth soccer team who were stuck in a flooded cave in Thailand. After being criticized by recreational caver who was an advisor in the rescue, Musk went on Twitter to refer to his critic as pedo guy. The caver sued Musk for defamation in federal court in Los Angeles, but Musk won the case. Also in 2018, Tesla stock took a sharp hit when Musk appeared on the Joe Rogan Experience podcast and smoked what was described as a marijuana cigar. Musk will also use Twitter as a sounding board, much to the dismay of shareholders. For instance, in 2020 Musk simply tweeted Tesla stock price is too high imo. The tweet cost Tesla $14 billion in market cap. Given all that, it's reasonable for investors to wonder if Musk is serious about following through with his offer. Another billionaire entrepreneur, Mark Cuban, says the offer to take Twitter private is a scheme simply to drive TWTR stock higher before Musk sells his stake. Currently Musk owns roughly 9.2% of the company. Reason number 2, Twitter's board may say no. Just because Musk makes an offer doesn't mean that Twitter's board of directors will approve it. And how the board responds will be interesting, to say the least. Already there are reports that Twitter's board is considering a poison pill to block the sale. A poison pill could allow Twitter to create new shares, which would force Musk to buy that many more to take effective control. At the current price of $43 billion, Musk would already have to sell shares of Tesla and free up cash to execute his TWTR takeover. The poison pill would up the ante. Musk, who has 82 million followers on Twitter, is using his platform to lobby for shareholders, not the board, to make the final decision on his takeover bid. Another major shareholder, Saudi Arabian billionaire Prince Al-Walid bin Talal, tweeted that Musk's offer falls short. Al-Walid owns 4.45% of Twitter. Kingdom Holding Co., which he owns, has another 0.72% of TWTR stock. And if the board says no, Musk has already hinted that he would no longer be a shareholder, meaning he would sell his 9.2% stake, and the Twitter stock price would fall accordingly. Jefferies analyst Brent Thill says that TWTR stock could fall by as much as 20% from current prices if Musk drops his bid. And if that happens, Thill says, another investor would be tempted to swoop in and try to buy Twitter for themselves. Twitter would definitely present value to a strategic investor. In our view, this could be a positive outcome given Twitter would likely prefer a consortium of investors rather than be controlled by a single large owner, he wrote in a note that speculated about a TWTR sell-off. The bottom line on TWTR stock. Musk already has hinted about a plan B should his takeover bid fail, but he hasn't said what it might entail. Either way, Twitter will undergo some serious volatility in the short term.